Good evening, everyone. This is Joe Henches for Beyond the Chart, and this is a market update for Friday, October 25th. So the Dow Industrials were up 95 points today. As you can see in the chart, the Dow continues to push a little higher. We've got the blue line, the 10-day exponential moving average, going up at a 45-degree angle. It's trending very nicely. We need to get this 20-day pulling back up, and of course the 50-day also. That's what we're looking for. So we need to get above this point, as I mentioned once before. This is my target. We got to get the Dow in line with everything else. S&P 500, again, the S&P 500 is tracking, it's above. Now, I would not be surprised to see it start to pull back towards the blue line, towards the 10-day, as it, kind of consolidates a little bit and then thrusts up again. Very similar to what it did as it moves up. It'll hug, it'll push away, it'll hug, it'll push away, pull back, push up. So, you're never going to get anything continue to go in a straight line like this. Markets just don't do that. So, and even like here in July and August, you pull back, then you push up again. So, it'll be interesting to see if we continue to push or whether we get a little bit of sideways consolidation here. And the S&P was up, 5.6 points. The New York Composite, very similar to the S&P. I'm still tracking a target that's much higher. It's up here. And that would be very nice if it could get to that point. The NASDAQ. Again, the NASDAQ continues to push higher here. Basically kind of the bulls won over the bears on this battle over the last month, and don't know that I've got any. I think I had a little bit of resistance I talked about up here, but it's a couple hundred points above. So we've got some room before we run into some potential selling, I think, on the NASDAQ. Let's see, we talked about the composite, the NASDAQ. Let's take a look at oil real quick, and then I want to spend a few minutes on some stocks here. U.S. oil. Okay, I talked about how oil is pulling back, and it's kind of had a little bit of a free fall the last few days, and how I expected to potentially get some support in here. Well, that support, in the 200-day and this support in this area really didn't materialize. It kind of plunged through there a little bit. Now, one thing I have noted when I look at the Fibonacci retracements, which is you look to see the retracement of this move, of the entire move, okay? So it's this move that I'm looking at. How far is it pulled back in the move? Well, this dotted line here, you see it's 50%, okay? And this is the 61.8%. That's another Fibonacci ratio. And I'll have to go into that sometime when we go and talk about that. But we're kind of in this zone here that's kind of a pullback zone, potential buy zone that a lot of traders look for, the 50 to 61.8% zone. Now, you get below this, then people are starting to go, okay, how far is this going to pull back? Is this going to retrace the whole thing? But right now, we're in this potential zone where the buying could start to come in on this thing. Sorry about that. That's it's my wife telling me she is on the way home. So you may get another ring of that text message. So we'll see. Let's see. That's oil. And let's see. I wanted to talk about Yandex. I got out of Yandex yesterday below the close, right at 40.87. Now, I didn't actually have an exit signal. I didn't have a close below the previous low, although it was acting that way most of the day. The thing that started to spook me here is that the earnings were coming out before the market closed this morning because Russia's ahead of us. This is a Russia stock based out of Russia. And I had seen some indicators as I looked at this a little more closely. I was seeing some divergence where the indicators did not go to a new high where it had gone to new highs on the prices, and that's negative. And I saw it there, and I was seeing it on the RSI. And when I reviewed that, I said, okay, I'm not sure why I need to take a chance here because I've got some profits to protect and book. So I went ahead and sold, and I was able to book 65% profit off of basically being in the market for, let's see, what was I in for 9 trading days. So I got in the morning of this bar at 38.01, got out at 40.87 up here, and the options I had appreciated 65%. So that's the power of trading options. Now, here's the other power of of trading options. If you would have stayed in, they would have popped the time premium on those components of it. I had 39, so they were in the money above 39. So they'd gotten above here. Look at this sell-off. For most of the day today, they were trading for less than 200, $200 an option, and I sold them for 330. So I mean, they will take it from you in a hurry, which is another reason why you have to kind of sit back and say, have my targets, and not get too greedy. So that's the lesson learned on that one. So that one turned out pretty well. YHOO. I did get into YHOO, and I got into YHOO on this day at 34.18. Now, it's pulled back on me, and I am using a stop at 32.01. I've got it labeled here, 32.01. That is 2 times the average true range of this stock, and I'm going to use that as the stop. And what I'm seeing here is a sideways correction. I'm expecting this thing to start heading north, start heading up. Now, the reason is when I look at this, I don't always calculate everything to Elliott wave, but I can tell you when I start to see some waves, it's very easy that you had a major correction here, and it just so happens that is what I call wave 4 from a move coming from August of 2011. We've had 1, 2, a deep sideways correction for a long time in this thing. And then I count wave 3, 4, and then we're in wave 5, and 5 should be 5 waves in this 5 waves. That's the way the Elliott wave works. Impulse waves are 5 waves, corrective waves are 3 waves. So we've got 1, 2, 3, 4, and I'm expecting a 5th wave. So that's why I'm looking to buy. Now, I could be wrong. I'm not an expert in Elliott wave, but I know just enough to be dangerous and just enough to get myself in trouble every once in a while. So anyway, that's what I'm looking at, but I do have a stop, and we'll see how that one plays out. Now, the stock of the day today, NQ Mobile. Wow. Now, I can tell you this stock is not closed. They closed this for the day, but they closed it around 2 o'clock or earlier. They halted the trading on this stock 4 times. Okay. Now, here's the thing. I was watching guys tweet about this and on stock twits, and they were just, everybody was stunned. They were in shock. But you were starting to see this negative divergence with some of the indicators here build up. Okay. I mean, it was just happening. The price was going to higher highs, but the indicators weren't. And so really you had something that was kind of very negative building, and then you got this one bar that I really didn't catch before, but this is what I call a reversal bar. Okay, it's very negative. It does it on a new high, it goes to a new high, and at least a 10-day new high, and then it closes down in the lower 30% of the trading day for the bar on that day. And then you get a close below that bar the next day. This is really dangerous. I mean, it's like, okay, this is kind of a signal. I've seen this happen over and over again, and it's kind of nice to be aware of it, but you need to have divergence occurring. This thing is just collapsed, and it at one point was down over 50%, and they're going to try and reopen it tomorrow. So anyway, just wanted to fill you in on that one, and that's about it for the evening. I'll talk to you guys this weekend. Have a great Friday. This has been Joe for Beyond the Chart.